Investment helps individuals achieve financial goals, protect wealth, and improve financial securities. In Islam, investment activities must comply with Sharia principles by promoting ethical, transparent, and responsible financial practice while avoiding prohibited elements such as riba, gharar, and maisir. Malaysia offers various Sharia-compliant investment opportunities to meet different financial needs and objectives. For this study, the selected investment product are gold investment, Sharia compliant share, private retirement scheme (PRS), and scheme simpanan pendidikan nasional (SSPNI). Understand the characteristic of this product helps individual make better investment decision. Private Retirement Scheme (PRS) is a voluntary long-term saving and investment scheme designed to help individuals collect additional funds for retirement. It allows both employed and self-employed Malaysians to increase their retirement saving through a regulated investment platform. PRS offer various retirement funds based on financial goals and risk tolerance and is regulated by the Securities Commission Malaysia to ensure good governance and invest protection. Its main purpose is to encourage long-term saving and improve financial well-being during retirement. Gold investment refers to the purchase and ownership of gold as a financial asset to preserve wealth and earn profit from its value over time. In Islamic finance, it must comply with Sharia principles where transactions are transparent and ownership is clearly established. Gold is considered a safe haven asset because it helps protect against inflation and economic uncertainty. Investors can invest through physical gold saving account, or Sharia compliant digital gold platform, making it popular choice for long-term financial security.
Now I will explain about Islamic share. Islamic share represents ownership in a company that operates according with Sharia principle. When an investor purchases Islamic share, they become a shareholder and own a portion of that company. Investor can earn return through capital gains will occur when the share price increase and through dividends, which are profit distributed by the company to its shareholders. To be classified as Sharia compliant, the company must avoid involvement in prohibited activity such as gambling, alcohol production, or sale, conventional banking, and tobacco related to businesses. In Malaysia, Islamic shares are screened and approved by the Sharia Advisory Council (SAC) to ensure that they comply with Islamic principles and ethical business practice. Islamic shares provide investors with opportunities for wealth creation while maintaining compliance with Sharia requirements. They are especially suitable for investors who seek long-term financial growth and wish to invest in a responsible and ethical manner. Next, I will explain about the scheme Simpanan Pendidikan Nasional or SSPNI. SSPNI is a Sharia compliant savings scheme introduced by PTPTN to help parents and guardians save their children's higher education. It's designed to encourage early financial planning and ensure that sufficient funds are available for future educational expenses. This scheme operates according to Islamic principles, making it a suitable for saving option for Muslims who wish to manage their finance in Sharia compliant manner. SSPNI offer competitive returns on saving and provide governance-backed security, giving account holders greater confidence in their investment. This ensures that the saving remains safe while containing cost over time. In addition, SSPNI provide takaful protection and income tax relief, offering extra benefits to account holders and their families. Overall, SSPNI help family prepare financially for future education costs while promoting a consistent saving habits. It is especially suitable for parents and guardians who want to secure their children's educational future through a safe and compliant savings scheme.
Now, I will explain the differences between gold investment, shares, private retirement schemes, and SSPN. Based on risk and return, diversification, initial amount of investment, registration process, and withdrawal process. In terms of risk and return, gold investment carries moderate risk because its price fluctuates according to market condition and is often considered a safe haven asset during economic uncertainty. Returns are mainly generated through long-term price application. In contrast, shares involve higher risk due to unstable stock prices and are influenced by company performance and market condition. However, shares offer greater potential for high return through capital gains and dividends. In terms of risk and return, private retirement schemes carries how to moderate risk depending on the type of fund selected. Conventional funds generally have lower risk and lower returns, while growth funds involve higher risk but offer higher return potential. Returns are generated through professionally managed investment. On the other hand, SSPNI has a low level of risk because it is backed by the government through PTPTN. It provides stable and guaranteed returns, making it suitable for conservative investors, although the returns are generally lower compared to certain PRS funds and shares. In terms of diversification, gold investment has low diversification because it focuses on a single asset class, which is gold, and its value depends entirely on gold price movement. In contrast, shares offer moderate to high diversification as investors can invest in different companies and sectors. This helps spread risk across various industries and reduce the impact of poor performance from a single company. In terms of diversification, private retirement schemes offer high diversification because it invests in various asset classes such as Sharia compliant shares, Sukuk, and Islamic money market instrument. The level of diversification depends on the selected fund type, allowing investors to balance growth and stability. In contrast, SSPNI has very low diversification as it mainly functions as saving schemes. The funds are invested in low-risk instruments managed by PTPTN, focusing on capital preservation and education saving rather than portfolio growth.
For gold investment, gold is actually super flexible. You don't need a lot of money because you can start by buying just 0.1 gram of gold, depending on the market. That's only around 56 to 60 ringgit. It's perfect if you have a small budget, and you can easily buy it online or at bank like Public Bank, Maybank, or CIMB.
In contrast, shares require a much higher starting capital. The minimum purchase on Bursa Malaysia is 1 lot or 100 units, so your initial cost depends entirely on the stock price. For example, a 1 ringgit Malaysia stock requires 100 ringgit Malaysia, while a 10 ringgit Malaysia stock requires 1000 ringgit Malaysia. It also requires a CDS account and market knowledge, making it more suitable for capital growth. Now, let's look at structured savings, private retirement scheme PRS, and scheme Simpanan Pendidikan Nasional SSPNI. For PRS, the minimum initial investment is a modest 100 ringgit Malaysia, as set by PPA Malaysia. It's an accessible way to grow long-term retirement savings, offering both conventional and Sharia compliant funds, plus up to 3,000 ringgit Malaysia in annual tax relief. Lastly, SSPNI offers the lowest entry point of all, requiring only 20 ringgit Malaysia to open an account, managed by PTPTN and fully guaranteed by the government. This Sharia compliance plan is dedicated to education savings. It is highly rewarding, offering up to 8,000 ringgit Malaysia in annual tax relief and annual price drops. In short, Gold and SSPNI are perfect for starting small, while PRS ensures cater to focus long-term wealth management. Next, look at the registration process. Starting with gold and shares, for gold investment, the registration is very simple. You can do it online or at any bank counter. All you need is a savings or current account with major banks like Public Bank, Maybank or CIMB. You just apply through their website or mobile app with identity verification. There is no special approval needed, and your account activates automatically right after your first gold purchase. On the other hand, registering for shares requires a few more steps. You must register for a Central Depository System (CDS) account through an authorized stockbroker or investment bank. This CDS account is managed by Bursa Malaysia Depository to keep an official record of your share ownership. You will need to provide your ID, prove your address, and a minimum deposit set by the broker. Once approved, you can immediately trade shares online through the broker's platform. Then, let's talk about private retirement schemes and Skim Simpanan Pendidikan Nasional, which is PRS and SSPNI registration process. To register for PRS, you can go through the Private Pension Administrator or PPA Malaysia portal or any participating financial institution. You'll create a PPA account by providing your personal details and ID. From there, you can choose your preferred PRS provider and fund type, whether conventional or Sharia compliance. The entire process is fully digital and future contributions can be made easily online or through authorized agents. Lastly, SSPNI, Skim Simpanan Pendidikan Nasional, offers a highly user-friendly digital process suitable for all age groups. Registration can be done quickly online via the PTPTN website or at any PTPTN branch. It only requires your IC number, personal details, and a minimum deposit of 20 ringgit Malaysia. Once your account is ready, you can access the PTPTN portal at any time to make deposits, check your balance, or do withdrawals. In short, while Gold, PRS, and SSPNI offer very straightforward digital registration, shares require a formal CDS setup to get started. For gold investment, the withdrawal is flexible and can be done anytime, either online or at a bank counter, depending on your account type. You can withdraw in physical gold or cash equivalents. For example, Public Bank's gold investment account allows withdrawals in multiples of 0.1 gram. There are no strict restrictions since gold value depends directly on the current market price. In contrast, withdrawing from shares involves selling your stocks through a broker or trading platform. There is no physical withdrawal because all transactions are electronic. The sales proceeds will be credited to your trading or bank account after a settlement period of 2 to 3 business days. This process requires a valid CDS account and is subject to market conditions and brokerage fees. Now, let's move on to PRS Private Retirement Schemes and SSPNI Skim Simpanan Pendidikan Nasional, which have very different withdrawal rules. PRS has a restricted withdrawal policy because it is designed strictly for long-term retirement savings. Funds can normally only be withdrawn at age 55. Yearly withdrawals are heavily restricted and allowed only for critical reasons such as death, permanent disability, or leave leaving Malaysia permanently. The process is managed through the PPA and requests must be submitted online or via your PRS provider. On the other hand, SSPNI is very simple and flexible. You can withdraw your money anytime without any penalty, offering high liquidity compared to other investment. Withdrawals can be done easily via the PTPTN website, mobile app, or PTPTN branches with a minimal withdrawal amount of only 20 ringgit Malaysia. In conclusion, Gold and SSPNI provide high flexibility for quick cash, while shares depend on market settlement and PRS strictly locks your funds for your retirement future.
Moving on to our next session, based on our analysis, we have picked the best two investment products from the list. These are private retirement scheme, PRS, and gold investment. And for justification why we choose these two investment products. First, let's talk about the private retirement scheme, PRS. It's a great choice because it shows strong growth recently with some PRS fund actually hitting over 100% return in 2025. It also gives you plenty of diversified options depending on how much risk you're willing to take. You can choose between equity, balanced, or conservative fund because it's retirement focused. It really helps us build disciplined saving for our long-term financial security. Plus, for Muslim investors, it is Sharia compliant, meaning it's aligned perfectly with Islamic principles. For the second one is gold investment. Gold is known as a safe asset. When the economy is not stable or uncertain, gold helps protect your wealth. It's also super easy to access. You can buy or sell it almost anywhere through bank, online platform, or physical gold shop. Gold is known as for long-term value, meaning it's safely maintained. It's worth over the time. Just like PRS, gold trading here also follows Islamic financial principles, making it highly suitable and Sharia compliant for Muslim investors.